In early October 2025, the Dutch government seized control of Nexperia, a Chinese-owned chip maker critical to Europe's auto industry. Beijing hit back instantly, halting exports from Nexperia's Chinese plants, sparking fears of a massive production halt from Stuttgart to Detroit. 7% of Europe's GDP and nearly 14 million jobs now hang in the balance. This isn't just a supply hiccup, it's a stress test for industrial strategy, geopolitics, and global economic diplomacy. In September 2025, the Netherlands invoked an emergency law to seize Nexperia BV, owned by China's Wingtech, citing national security fears. Washington's expanded export controls left The Hague little choice. But Nexperia isn't a niche startup. It's one of the largest suppliers of diodes and transistors used in cars and electronics worldwide. When the Dutch acted, Beijing retaliated, banning shipments of key sub-assemblies, sending Europe's automakers into panic. Within days, industry groups warned of significant disruptions. Cars today are computers on wheels. When the chips stop, the lines stop. The auto industry supports 13.8 million European jobs. It's the backbone of manufacturing. A McKinsey study shows Europe has already lost 13 points of global market share since 2017. The Nexperia crisis exposes just how fragile that backbone has become. As Europe scrambled, America lurched from optimism to panic. President Donald Trump threatened 100% tariffs on all Chinese imports, then called them unsustainable 2 days later. Each reversal sent markets soaring, then crashing. He accused Beijing of committing an economically hostile act by refusing to buy US soybeans and even threatened to ban Chinese used cooking oil imports, a billion-dollar trade flow. Trade policy is now made in real time, one post at a time. The S&P 500 swung wildly as executives, workers, and consumers struggled to plan. 43% of US businesses said they'd need a year to adjust supply chains if tariffs hit. Trump's strategy, using economic pain as leverage, may project strength, but it breeds uncertainty, and that uncertainty is toxic for global confidence. While politicians tweet, central banks are quietly dumping dollars and buying gold. In 2024 alone, they bought more than 1,000 tons, double the decade average, pushing global holdings near record highs. Gold has overtaken the euro as the second largest reserve asset after the dollar. The metal now makes up roughly 25% of world reserves. US treasuries have fallen to 23%. Gold prices smashed through $4,000 an ounce in October 2025, valuing central bank vaults at over $4.5 trillion. The dollar's share of global reserves has plunged from 70% in 2000 to about 40% today, a direct reflection of political dysfunction and sanctions fatigue. Why gold, not crypto? Because gold has no counterparty risk. It doesn't need a blockchain to be trusted. Central banks are returning to the oldest safe haven there is. Here's how it connects. A Dutch chip seizure leads to a Chinese export ban. That triggers US tariff threats. Markets crash, investors flee to gold, the dollar weakens, which fuels more political panic and more protectionism. A feedback loop between fear and policy missteps. China's smartest move has been restraint, letting the West exhaust itself while Beijing builds supply chains and influence. If trends continue, the world could fracture into 3 economic blocs: US, EU, and China, each with its own currency sphere and resource network. In that landscape, gold becomes the bridge, the neutral asset everyone trusts when they no longer trust each other. Europe's seizure of Nexperia shows how a single decision can ripple through industries, markets, and alliances. America's tariff volatility shows how 280 characters can move billions in minutes. And the rush to gold shows how the world's faith in fiat money and in US leadership is quietly eroding. Economic security is now geopolitical security. The next decade will test whether nations can cooperate through turbulence or retreat into rival blocs. Because if 2025 has shown anything, it's that the new global order may already be under construction, built not on silicon or steel, but on trust. Are we watching the birth of a new gold-based multipolar world, or just the last gasp of a broken financial order?